Broadcasting live right now. Get a couple screens oriented here. Everybody hang tight. All right, good morning or good afternoon. That's correct. We have folks from all over the globe that will attend today, which is awesome. Appreciate that. Welcome. Thanks for the good mornings, everybody. We're going to get started right on time in about 6 minutes. If you could type in, Polly, how are you? Good to see you, as usual. If you could type in Cags, I can see a NinjaTrader.com website and a chart and hear me okay. That would be awesome. David, welcome. Thank you for being here today. Awesome. All right. So we're in business. Yeah, we're a little bit early. You know, I like to log in just to make sure my setup is good. Everybody has a chance to get in here and say hello. I am in the NinjaTrader headquarters here in downtown Chicago, and it's a beautiful day. My name's Jim Cagnina with NinjaTrader. Just wanted to say that for those of you who are new, we do this every Wednesday, and we're going to look for some trade ideas today using the NinjaTrader platform. And you know, the most important thing is interaction. So be sure, you know, don't be shy. You know, type in some questions or observations or anything that is on your mind. That's part of the awesome thing about these, you know, online, you know, webinars, whatever you want to call them, is we all could interact together no matter where we are. You know, my ideas might not be the best ideas. They might be okay. I don't know. I'm going to give you my observations based on, well, more than 20 plus years of doing this. I won't tell you exactly how many years. I don't want you to know how old I am. So I don't think I have yeah, no, I'm not showing. Yeah, you should just see the screen, right? That's all you see. You don't see me, do you? You don't see a picture, a video of me talking. That might scare some folks. Might scare some folks off. Just the screens. Thanks, Charles. Gordon, hello. If I'm missing your hellos, I apologize. They're cruising through this chat box like crazy. You know, my colleagues, I know we're broadcasting in a couple different venues, and my colleagues at NinjaTrader are helping manage the chat for me, which is I greatly appreciated. That's the thing here at NinjaTrader. Everybody helps everybody. You know, it's a case where you know, whether you need brokerage support, platform support, accounting support, whatever it is, there is a very capable and large team behind not only me, but behind you, most importantly. Gordon, the session's going to start in 3 minutes. 3 minutes. I'm just, I logged in early. I'm just pretty much killing time now. Just chatting, talking about myself a little bit. Mohammed from Morocco. Awesome. Awesome. Thanks for being here. Again, the beauty of the Zoom meeting, we have folks from all over. I am sure. It's actually kind of sunny in downtown Chicago. You know, the NinjaTrader office is right off of the Chicago River. Chicago gets bad rap in the media sometimes. And yeah, there's some issues here, but it's a beautiful city. I mean, it's fantastic. The lakefront and the rivers and the river walk down here. There's people running and jogging and walking their dogs. People are canoeing and paddling on the river right out there. There's restaurants and bars along the way. It's spectacular. We got the Twin Cities represented here. Awesome. We're going to start in 2 minutes, guys. I apologize for the banter. Good morning from Arizona. Doug's up early today, as he usually is. Yeah, so being a futures trader on the West Coast takes a little, you got to set the alarm. But that's okay. There's a lot of opportunities here. Sabina's from Chicago as well. Awesome. Sabina, thanks for being here. So basically what we're going to do is, we'll start the event. We're going to talk about risk. We're going to take a look at the market that I'm interested in today, which is the E-mini S&P. And then I'll also share how you could participate. I'll suggest some paths on how to participate, not only with trading futures in general, but also with NinjaTrader. Mohammed says, I'm new to trading. Can you tell us how long it could take me to become a professional trader? Yeah, that's wow, right off the bat. We could talk about that. I mean, this is not easy, right? You need to be committed. You need to be a student. You need to start slow, and you need to be diligent in your process. And I'll talk more about that as we go. It's a process, but it takes effort for sure. Nothing's super easy here. So, and I'll talk about a pathway that you should consider. You could consider. Yeah. So Ed says, will your strategy for? I think the question is, I'll read it. Will your strategy for mini, but pretty much the same for micro, as far as a setup, et cetera, et cetera. Yeah, the micro E-mini S&P and the E-mini S&P are completely in sync, and so the strategies are going to be, will apply. Whether they're good strategies or not, it's a different question, but they'll apply in both markets, right? It just depends on which market you want to use. And there's some tips and tricks on the micros that you could use to kind of add to your strategy. Olympia from the West Coast. Joseph, thank you. All right, it's 9 o'clock. Let's go ahead and get into this thing. Before we do, I just want to remind everybody, trading futures, options on futures involves substantial risk of loss, not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. Although that's an equation for opportunity, which is why we're all here, it's also an equation for risk. So be careful. Only fund your futures trading account with risk capital, your day trading account with risk capital. My personal definition: money I could afford to lose, doesn't change my lifestyle, doesn't change my retirement horizon, and doesn't overly anger Mrs. Cagnina. Now, that third part's a little bit tongue-in-cheek, but not really. Stress in life matters. When you're under stress, you make bad decisions. And this isn't a trader's advice. This is my life advice, right? You're under stress. I do anyway, make bad decisions. So be in a good place, be comfortable, easy on the day trade leverage. If you want to walk through exactly, your situation, because everybody's different and unique in this world, reach out to your NinjaTrader representative and say, hey, I want to talk about risk capital. I want to talk about how, what markets I should trade. I want to talk about what my margin should be. This is our job. This is why we're here. We'd be glad to help. No obligation for that phone call or that email or however you want to communicate. All right, we're going to be trading in a real-time practice account today, and I have my Ninja up. I'm going to show it in a second. Any questions on risk, type them in. Remember, past performance not indicative of future results. We're not going to talk about any of that past performance stuff today. Here's the homepage, NinjaTrader.com. You could pretty much get everything from here, but I'll go in detail on the promotion for this month and how to get a demo account and all that stuff a little bit later. So let's kind of jump into this thing right now. All right, I have two charts. I have a chart on the left, 10-minute chart. We're going to be working with the 10-minute chart to come up with a trade idea. But before I even do that, I like to see a daily chart. I have a daily chart on the right-hand side. I have a pretty decent sized monitor, so hopefully you guys could see this okay in the Zoom broadcast. Actually, you know what I'm going to do? I'm just going to temporarily expand the daily chart a little bit. And why do I start with the daily chart? Well, I want to see what I want to decide what my bias is going to be for today, right? And so there's a couple of things I look at: the actual chart itself, and what economic releases are coming, what's expected, what's happening in some of the other markets. All of these things are going to help me kind of decide what my bias is right now. And this is just a daily chart, daily candle chart. There's not a whole bunch of stuff on here. I don't have a moving average. I don't have an oscillator. I don't have a MACD. I don't have a Bollinger Band. Easily add this stuff to this chart, but I don't care on a daily chart. This is, again, my personal opinion, how I look at things. Now, this I drew some lines on this chart, and we had a pullback here in I don't know, a few weeks ago. And, we've been rallying up since, and we're coming up to what I would call maybe a double top type of formation, right? This blue line I just kind of drew across here at the very top. And it just, it's not totally scientific, but it's just, I just picked off the highest candle I could find, and I drew the line over here with the drawing tool on the NinjaTrader charts. And I said, okay, anything above this, at this or above this, is going to be considered resistance, right? In my mind, the market tried to get up here once, couldn't do it. We broke back down. Market's trying to do it again. Will it break through this time? I don't know. Maybe it will, maybe it won't. But I'm looking at an area of resistance up here. So that's why I drew that line, right? Now, this dotted line here that I drew, this is just a ray. I just added a ray. And what I did was I started it from the bottom of the lowest body of the candle, and then I connected the dots until I got this dotted line, this dotted ray all the way up. And it generated, some may consider this an ascending triangle type of. It's not a perfect one. It's not a perfect one, and it's kind of it's a little bit short term, but you could consider it a ascending triangle type of formation. And the idea is, of course, we're going to break. If this is true, we're going to break on through that line. Everything else, notwithstanding, the idea of this type of pattern is we will break through that horizontal line at the top. Doesn't always work that way, and it might not, but that's something that's going on in the back of my head. Now, the other thing I drew on this chart with the text tool was, how big are the recent candles, right? How big are the recent candles? So let's go back, not today, not yesterday, the day before, 18.5 points. Which we also refer to as handles, right? It's kind of a trader's terminology thing, right? Handle is a point. And then yesterday was 31 points or handles. And so it's a relatively small range, right? Relatively small range. Let's take a look at this red candle here. And I'm just going to kind of use my mouse, my wheel in the middle of my mouse to look at what the stats are on that particular candle. And if it's too small to see, I'll read it to you. The high was a 41.50.5, and the low was 40.51, right? High to low. That's almost 100 handles, right? That's a pretty juicy candle. That's a big one, right? So in relationship to that, we're seeing smaller volume week so far, smaller range week. I'm sorry, not volume, but smaller range week, which is going to translate into volume too. Today, right now, let's just go ahead and do the same thing today. High to low, we're looking at, pretty, 14, less than 14, small range day to day. Okay. So my takeaway here is, I am in a bullish mode right now. I was yesterday, and I am again today. And let's just kind of go back in time here and just to really, really accentuate You know, it doesn't take a rocket scientist to look at this thing and say, yeah, this market, as it usually does, the stock, S&P 500 stock index futures is in bull mode. And in my opinion, this is really a function of really a function of interest rates, monetary policy, and just kind of what's going on with everything related to all these supposed crises that we're having all the time. It seems like. One last check here before we depart. I'm just going to put my crosshairs there just to see where that blue line is. So that blue line is, around 37, right? So we're about 8 handles north of where we're at right now, which is achievable. This isn't something that's not achievable. So I'm going to minimize this. Take a look at notes here. Not a lot to talk about for notes. Actually, let's skip the notes section for a second and just shoot right over to the 10-minute chart and see if there's anything forming for us to try to exploit right now. So this is a 10-minute chart, right? 10-minute chart. I could change it to whatever I want. It's really easy to do. I'm not going to do that though, because I like the 10-minute chart. And I have the order flow volume profile on the left-hand side. We'll talk about that in more detail. You can see this. This is an important line to me. This, I don't know if it's brown or orange on your screen, 42, 32 even. That's called the point of control. That's something that's a point of interest for me as I'm considering what to do here. Now, I also have a moving average cross. My fast, simple moving average is red. My slow is light blue. And then at the bottom, I have an oscillator. In this particular case, I have a MACD. You could, I suggest you experiment with all the different oscillators that are here, that are available to you, that are resident on the platform, and see which one you like the best. And most oscillators, they oscillate around a zero line. And there's an overbought number and an oversold number. But really what I like to see is the velocity of the change. And with respect to the MACD, it's, convergence, divergence. The formula is not that complicated, but this kind of shows you momentum and velocity of changing in price. And this is why I like this one. I also like the CCI, the Commodity Channel Index. So let's take a look at some of these candles now. I'm going to kind of stretch this out a little bit. We're going to go back here and get my crosshairs back going. There are shortcuts, keyboard shortcuts you could memorize also to make it easier. 840 candle, we've talked about this several times in the past, is oftentimes what I'm going to call the cornerstone or keystone candle. It sets the pace for the morning. And it's not the 830 candle, 830 to 840. There's usually other things going on right away on the open, right? Longer term investors establishing positions, hedgers establishing positions, algos kicking in. But once the dust settles, the 840 bar, the 840 candlestick, it's actually a candle. It's not a candle. I don't know. I call it, Dan Grams had told me to call it a candle, not a candlestick. So I'm going to call it a candle with 2 wicks. And it's a pretty big red one. It's setting the pace right now. The next candle over is a doji-like candle, right? The open, the high and low. The open and close of that candle are nearly the same or at the same. We have really big wicks up, really big wicks down. The wick on the top was pretty big. It suggested a lot of sellers came in and pushed the market back down. The next green candle kind of paused a little bit. We kind of rallied back up here, couldn't keep our momentum, and now we're back on the downward side. So right now, really, I want to look at the range here, and I don't want to make the same mistake I made yesterday. And I want to really be patient here, and I want to say, okay, I'm interested in going short right now or long right now. Where do I want my entries to be, right? And my overall bias is bullish right now, but which means I want to look for places to buy. And right now the market's trading right south, or right at actually the transition between prices, the value area, which is the 1 standard deviation worth of volume here in the dark blue, and prices below value, which is the light blue, and you can see the low way down here. So what I want to think about is what's the contemporary low, right? The recent low here, and it's this candle right here. It's this candle right here, and don't worry, we're not missing anything. It's right here, 640 candle, and the low is 42.24. I want to see that challenge. That's a pre-market low. It's not associated really with the UK Open or the Frankfurt Open, but I want to see it challenged, right? And it seems to be pretty far away, but it's not really. It's only 4 handles away. So my first entry is going to be down just south of that, right? And I'm just going to, or even right at it, just right click. And all I'm going to do is I'm going to send an order to a limit order, right, to the exchange to buy a contract at 42.24 even. Click send. It's gone. Now this is a practice account, a demo account, but in a real account, this is gone. This is at the exchange. It's waiting to be filled on a first come, first serve basis. You're in line behind, other contracts that were there before you. Okay, remember 23-hour market. Somebody could have placed a limit order at that exact same price, last night at 6 o'clock. And it could still, well, actually, no, that wouldn't be true because you would have been filled by now. So let's see, they could have placed it, and if we did a little bit lower than this low, it would have been, I don't know, 1:50 in the morning. So that order could still be there in front of you, is what I'm trying to say. All right, so let's take a breath now and kind of look at what the candle's actually doing. Right now we have 1, 2, 3, 4 candles, and I'm going to draw a rectangle here just to show you kind of a short, how I would view let's go to rectangle, a short-term or a really short-term area of support. And I'm just going to kind of freestyle that rectangle right there. And that rectangle now is telling me, listen, this is support. 1, 2, 3, 4 candles tried to close in here, and they couldn't, right? We couldn't get down there. And so when this area gets breached, if it gets breached, then I'm more excited about our order entry. Alternatively, we could be stuck here, right? It could never get breached, and this would never get filled. But I don't know, maybe the number 2 most important rule is patience, right? Let's be patient. So I am going to be patient. Joseph asked, if your computer crashed, is that limit order on the exchange server? Yes, it is. Right? If your computer crashed, your Comcast internet goes down, your whatever. Hopefully, this tragedy never happens to you. But once you get that fill confirmation back, where we're buying one at a limit, then and you can see it up here at the top too, working. It's at the exchange. You got an order. You got an ID, order ID, and it's just what happens. We're not holding it in our back pocket for you. This is ready to go. So that counts. We'll keep it up there. Hopefully that answers that. Same with the stop, right? You send a stop order, it's going to be the same thing. And while we're at it, we're going to do the number 1 important rule. The number 1 important rule is patience is number 2. Number 1 is always have a stop in, even if it's a catastrophic stop. So we're going to just do a catastrophic stop down here. I'm going to right click, and since I would be long one, this would be a sell stop, right? So I'm going to just put a sell stop there. Now this is kind of 2/3 of the anatomy of every trade that ever happens, right? We have we have an entry, then we have a stop, and once we get filled, we'll put a profit target in. So, but right now, this is a crucial step. Always put your stop in. These markets are a lot of volume. But they could also be very volatile, and you want to protect yourself from a catastrophic situation. Once this is sent to the exchange, it will be triggered before the market, when the market gets down that far, if it does get down that far. Okay, so Alex, you could certainly set up. All right, this is a great question, because with NinjaTrader, you can set up an OCO strategy and place all of your trades at the same time, and they'd be all basically linked together, right? But in this particular case, since I'm kind of explaining my thought process, and I'm doing it kind of in a slow, deliberate way, I'm just legging into my orders basically. But you absolutely could do that. And as a matter of fact, I recommend it. They consider that because on an OCO, order cancels other, you have a situation where you would have your, everything would be triggered, everything would be synced together. So if you get stopped out, your profit target gets canceled. If your profit target gets hit, your stop gets canceled. You don't have to worry about a double fill or a bad, whiplash kind of situation. James, let me repeat your question for those of you who might not be able to see it. Hi, Jim. Would you say your focus is more on price action than on any of the indicators? And I'm going to say, price action is a big word. It could mean a lot of things, right? It could mean a lot of things. I like to look at the candles. I love the order flow volume profile. It's very meaningful to me. Those are the two main things. So to the extent that price action is reflected in a candle, yeah, I mean, for sure. And let's just take a look at what just happened, right? So we have a lower low on the contemporary candle, right? So from, let's take a look at our benchmark 840 candle. Then we had a lower low, lower low, little bit of a reprieve, and then a lower low, right? So this is relatively negative in my mind. And then again, here we have another area of, the highs of the day, 1, 2, 3, not the highs of the day, but yeah, the highs of the day, 1, 2, 3 times we couldn't get up there. So this is serious resistance up here right now. And then you go, a lower high, and we'll see if this becomes a lower high. So this is all kind of negative to me, but given the fact that this is kind of a small range today, I'm comfortable where I'm sitting right this particular case. So let's just hang tight before we make any other changes or decisions. Let's just shoot over to my notes, which I alluded to earlier. Wednesday, June 9th. Could you believe it's already like summertime? MBA mortgage applications was released this morning. I think this whole interest rate thing, the Fed funds, FOMC policy, QE, tapering versus not tapering, and then all the infrastructure money that's coming out is really, really, really driving the velocity of these price changes. And so when you look at the mortgage application situation, part of it has to do with what's the anticipated interest rate picture that's coming that might change in the future, right? So this particular economic release has a composite index, and you kind of compare it with the prior week, and see what's the trend. You could literally chart these things. And then the two other categories are purchase index, in other words, new mortgages, and then refinance index or refinancing. And so the trend here over a long period of time may or may not be helpful, but that's why I like to look at it. These particular stats aren't going to move the needle. They don't, they're not too extravagant in my mind to worry about them. And again, this was an early morning release anyway. There's a link there. Here, let me just cut and paste this link. I know you can't. I'm going to put this in the chat box there for everybody. Daniel, I do use Fibonacci's. We'll talk about it in a second. I don't know if it's Fibonacci. We'll talk about that momentarily. The range is so low today, it's really, I don't know how meaningful they would be. But, and lastly, on this mortgage application release, it talks about the average loan size on a purchase application edged down to 407,000. Below the record 418,000 set in February, but still far above the 2020's average of 353,000. Home price growth continues to accelerate, driven by favorable demographics and recovering job market and economy, and housing demand far outpacing supply. At least that's the analysis that we have here now, which suggests a couple of different things. One, people could afford more expensive houses. Two, maybe there's an inflationary factor going on. And three, when we get back to normal, maybe maybe the purchases will continue. That's kind of my personal takeaway. Wholesale inventories came out. I don't know what the answer was. I just typed in the consensus there because I started the event before. I didn't get a chance to double check. And then EIA petroleum status report is a thing, right? Consider that if you're trading crude oil, natural gas, any of the energy complexes. And by the way, there is about to be a new micro crude oil contract hitting the street July 12th, if all goes according to schedule. I'll share. Actually, I'm going to jump down to that. I'm going to share the contract specs here this is going to be, in my humble opinion, this is going to be the real deal market. This is going to have some volume to it. It's going to have some interest in it. The micro crude, it's 1/10 the size of the regular crude oil contract. Forget about the mini crude, which is in between. I think this might be a good one. And you might notice below here, micro treasury yield futures, August 16th. I'm not sure what that is yet, but we'll do some research and figure that one out when we can. My notes from last time: low range days may require tighter entries and exits or wider entries. We're implementing a wider entry strategy right now because we're waiting for an entry. A tighter entry would be, buying around, 29 and trying to sell around 31, with where the meat of the volume profile is, that would be a tighter strategy. But, I'm patient. I could wait this thing out. I could outwait it forever. So that's what we're going to do today, at least until we see a couple more, the 9:30 candle pop up. FOMC next week. So don't be surprised if we have these low range days between now and next Wednesday, because Wednesdays when they do their announcement, they have the press conference, and they all the confetti gets shot in the air, they release balloons, all that stuff's next Wednesday. And they have their summary of economic projections every other meeting. So this one they're going to have. The next meeting is in July, nothing in August, and then the one after that's in September. And still in my back of my mind is Yellen's interest rate comments about raising rates. That will cause certainly some volatility in this particular market that we're looking at right now. Okay, enough of the notes. Any questions? Ooh, there's a lot of questions. The square root asks, it's not really temporary. 42.27 has been support and resistance area for a couple of days now. So let's just go and move our crosshairs over there. 27 is right there. I mean, I hear you, but I mean, we traded below that for all of last night, all the way up until, pre-market. So there's a lot of fluff down there. There's a lot of opportunities down there to try to get long. Timo says, if I have an ATR strategy, stop loss, will the stop also be at the exchange? Yes. Timo also says, if the next candle becomes a hammer, maybe an entry long could be appropriate for that. Okay, so a hammer is a candle formation, right? And it looks just like that, right? It has a long wick on the bottom, and then there's a head, like the body of the candles at the top, right? It looks like a hammer, and that, depending on where the hammer is, it could until we see one that's pretty good, it could suggest some sort of price action. And it depends on if the hammer's at the top of a move or at the below of the move. So let's just take a look. Let's just take a look real fast. We have let me get my local crosshair. Here's kind of a weak one right here, right? So it's at the top of the move, and sure enough, the market crashed for broke down for 1, 2, 3 candles in a row. This one is a little weak, but we had another breakdown in a couple of candles after that. So let's just see what happens here. If we can get that kind of formation, let's talk about it. Right now, I'm not so sure. Again, we're only looking at a 10-minute chart, so it's those kind of formations are a little less significant than they would be in a longer term point of view, 30-minute, 60-minute. etc. Again, this is my experience. This is based on my just my opinion. Clint, so that the rollover thing should be automatic when you log in. When you first log in, you'll see the window pop up. So let's me and you coordinate. I'll type in my email address here in a little bit, and we'll diagnose what you're saying. Logan says, I be on the micro crude on open. Sweet. See, Mohammed asks, does Ninja include a trading algorithm software? So this is a professional grade software, right? And there's all sorts of apps, and there's all sorts of opportunities to program algos and into it, right? So the answer to your question is yes, Mohammed. This is heavy duty. So depending on your level of skill in terms of programming, or if you find some other apps that you could plug in alongside that you're interested in addition to the automatic trading strategies that you could do manually, the answer is for sure yes. Okay, so where are we at? One and a half more minutes, I think, until we get the 9:30 candle, and we might change our mind at 9:30. We might come up with a more aggressive strategy right now. Things are kind of slowing down. The volume right now. Look at the market analyzer in the upper right. I have a daily volume of 418,000, pretty low. We're only up 5 on the day. That's pretty low. It's not extraordinary. So we're in a tight range. And if you remember my notes, we either try to exploit the entire range or we try to get in the middle of it. Maybe we'll look for a middle idea. NQ up 42, not that much for the NQ. The NASDAQ market, there's a micro NASDAQ market, the $50 day trade margin that's available if you're interested in that. ZB is Treasury Bonds. This whole, we did have a little bit of a yield crash yesterday in the Treasury complex, which means Treasury prices went up, right? The inversely related there. And right now we're up about 2/3 of a handle. It's in the bonds. We were over a whole handle a while ago. Actually, when we first logged in. Crude oil, 167,000, pretty low. 70.34. A lot of talk about crude being, going to 100. I don't know if that's going to be a self-fulfilling prophecy or not. Crude oil is a really good market to pay attention to the commitment to traders reports that are released by the CFTC every Friday afternoon. It shows long and short positions, net long and short positions, open interest. Okay, 9:30 has come and gone. I'll get back to the questions in a second. Let's get back to what we're looking at here. We're smack dab in the value area here. I mean, we're at the top of it right now. And the contemporary candle is, it didn't have velocity like I thought it would at 9:30. It just kind of there, and not sure what to do. So if you really have to do a counter trend trade, really have to do a counter trend trade, and you can't take it anymore. I'm not a huge fan of this, but what I would, and the reason I'll show you why I'm not a huge fan of this. Let's go ahead and say, you know what? If this market, hits the transition between the value area and prices of the value area, I want to sell a contract. And so I'm just going to go ahead and, I'll sell one on a limit order. And so now I have to put my stop in. And the problem with the counter trend trades in these scenarios is, where do you put your stop in? There's no reference anymore. There's no candle information. There's no buyers and sellers up here. Where do you put your stop at? So, the obvious thing is, well, if we make new highs, I want to get out, I'll be wrong. And so 42.35, how many times have we tried to put stops in an area that that looks like this, and we get stopped out, and then the market goes our way, right? So you really have to give yourself some room here. And in my world, room is 8 ticks at least, right? So we're at 42.37 for what would be a buy stop. So that's what a counter trend trade would be. And I'm using the word counter trend because I'm bullish. If I were bearish, then I wouldn't use the word counter trend trade. All right, so that's kind of that's the problem. Where do you put the stop at? Because you don't have an obvious like point of support and resistance other than at the very level that those 3 candles traded, right? At 35. And it stops sometimes attracts some love in the wrong way, negative love. Okay. Any other questions? Feel free to type them in. We got some time. I'm going to leave the counter trend trade in. We'll see what happens if we get it or if we don't get it. On the bottom side, on our entry position, another strategy would be, hey, I want to have a 2-unit trade, right? A 2-unit trade. And so where would I get a second unit? Well, I want to be more aggressive, right, in my second unit. And I want to see another attempt to get into this rectangle, this random rectangle that Jim drew. And, just pick in the middle here, and we'll go ahead and try to buy another contract. So what this would do, if in fact we got down this far, was it would buy the first unit here, and if it continued on, buy a second unit, and then we would have an average price in between it, 42.25 and a half, right? We'd be long 2 from 42.25 and a half. We'd be basically dollar cost averaging in. I'm not a fan of the words, but that would be a 2-unit trade, right? And then your stop, of course, would be the same, but you would have to make it a 2 contract stop, and then consider where you want to put that stop, because you're going to have now a 2-unit trade, which is going to have twice. It's going to have 2 times the P&L, right? And it could be a negative P&L if we're down here before the lows. So the way I like to do this, because I want to be very deliberate in how I do this, I'm going to change my order to a 2-lot. This is how you actually open up that little panel here. Kind of, it's if you don't want to right click, left click, or you want some more information, there's this little icon at the top that looks like a blender turned sideways, and you could turn off chart trade, or you could turn it on, and you could hide it. So I just turned it on, right? And then, we're going to go back down to, to lows, and right click, and I am going to do a sell stop. There we go. So this is, I know there's a lot of stuff here, but think of the top part as a counter trend short trade. Think of the bottom part as a multi-unit long trade going with the trend, right? So I have a couple of things going on here right now, and I don't know if it's a good idea or a bad idea to leave them both up. If you had a real account, that would be personal preference. But it's a different strategy. It's something you could employ. And remember, if you're new to futures trading, which my guess is some of you are, it's really easy to sell short without having any position whatsoever, right? So that's that's my setup right now. That's what we're waiting to see what would happen. So let's do. Someone asked about fib line, and they're really, I do like them. The range is so slow though, so small. I'm not, it's not going to help us much, but let's go ahead, and I'm just going to move this way over to the right, and we're going to go ahead and add a fib. The question too is, where do you start and stop this thing, right? Do you want to do a fib that takes into consideration the entire day, the entire session, or do you want to do a fib that just, takes into account, the open, right, and where we are recently? So, right now, when I look at this, there's a lot of stuff happening here in the middle of the volume profile. A lot of volume in the middle. It's almost, you know, if we get some more volume a little bit south of here, it's going to be really almost a perfect Gaussian type distribution, right? So bell-shaped curve for 8th grade math or senior in high school math. I don't know. I can't remember that far back. So, you know, I'm gonna draw the fib from this pre-market low to the recent highs. And so the way I do that is I just get my pencil. I'm gonna go to Fibonacci retracement. I'm gonna pick the high, and I'm gonna do it off to the side so it doesn't clutter my life up anymore. Then my life is already cluttered. I'm gonna pick the low, and I'm gonna add it. Those are the standard fib lines, right? Now, I would modify mine. I'm just going to right click on properties and change my price levels here. I'm going to hide the 23.6, especially today, and I'm going to hide the 76.4. Take that off there, and I'm going to hit OK, and I am going to hit OK, and there we have it. And you could adjust your properties however you want, but you know, right now, and it doesn't matter if you go high to low or low to high. I went low to high. The percentages will work out the same, right? 1, 2, 3, what I would call important levels aren't going to change. So, you know, right now we're at the 61.8. 50 is the next stop. So, you know, one could argue if we want the trend to continue to go up, you know, we want to wait until we get closer to the 38.2% before we get long again. So that's a traditional way of looking at it. Let me kind of make this a little bit bigger. I'm going to reduce the MACD. Hasn't really come to play yet, other than it's starting to converge a little bit. You know, so just forget about everything else and let's look at the fib. You know, certainly between 50 and 38.2%, a traditional Fibonacciist, is that a word? Fibonacciist, anybody help me? Would you know, would be, once we hit that 50% or maybe a little bit south of that, let's go long. You know, let's do it. Let's not wait. Time is of the essence. So that would be more of a traditional entry idea. But you know, I just think the range is too small today to really exploit that, unless you're going just for, you know, a few, you know, 1 or 2 handle trade. Paulie, I'm not going to add the Ikamuchi cloud today. What I will do though for you is for the next one, we'll go ahead and do that from the get-go. It's 9:40. I want to see what the next candle is, and I want to think about what we're looking at right now. But it's easily addable. I mean, it's easy to do. All right. Any other comments, questions? Type them in. While we're going to have another bar right now, I believe. I'm going to get rid of the fib. No questions on that, right? Let's just remove. Let's get my, and then I want to give myself a little bit better view here right now. All right, so another green bar. So let's take a look. We got a higher low, higher low, higher low. We have a higher high, a higher high. And you know, let's see if this does continue. Maybe we have a shot at getting short at 33 1/4, selling one contract at 33 1/4. Again, it's really slow. Patience is really the hardest thing you could possibly do in trading. I mean, most people defeat themselves when they change their mind, they change their strategy because they're impatient, and you don't even know you're being impatient. So really, you need to come up with strategies. Again, I hate when people say you need to. I apologize. I keep doing that. I don't like when people tell me I need to, but sorry about that. But consider coming up with strategies that could keep you focused and not allow all the chemical processes that are going off in your head, fight or flight, you know, dopamine, all that stuff. Don't let that, you know, all the excitement or lack of excitement change your fundamental analysis, right? And that's the hardest thing. So pretty close here. We're a tick away. While we're waiting, while we're waiting, I am going to cut and paste a couple of things into the box here. I'm gonna cut and paste the 14-day free trial. Hopefully, hopefully you go through that process. Someone asked earlier, what is the process of becoming a professional trader? It's hard to do, and the road is long. I'm not gonna sugarcoat it, but what I've seen as a pathway is try a practice account so that you get familiar with the nuts and bolts of execution, of analysis, and start developing a trade method that works for you. It's kind of number one, right? Learn how to use the tools and try to get into a rhythm of maybe a potential strategy that you want to do. Step number two, if you're brand new and you have limited risk capital, open a live account, and I'll put that, and I'm going to put that, link in here. Fund your live account, and then trade some micro contracts, right? So they're 1/10 the size of the contract that I'm trading right now. So instead of a tick being worth $12.50, a tick is worth $1.25, right? So it gives you the ability to trade real money and open up the floodgates for all of the psychological demons that pop up when you trade real money, with risking less per trade because it's a micro. It's a smaller size contract, and they're most of the stock index futures are very liquid. Again, I think the crude is going to be very liquid. There's currencies, there's gold, there's other micro contracts where you could do the same thing. Trisha, my counterpart at Ninja is going to be cutting and pasting these into whatever platform you're using. I'll show them on the screen here in a second. So bear with me. And then the third thing is, right, on your goal to doing this is to then graduate to the classic size contracts, the bigger ones, like I'm using right now. Let me just pull this in front here. And I'll leave this up here for a second. Is it Trisha? Am I saying that right? I apologize. I don't know how to pronounce anyone's name. Yeah, Ed, we're going to talk about that in a second. Ninja 14-day free practice account. Oh, you know what? Just go to NinjaTrader.com. Don't even use that link I put in there. My bad. Just go to NinjaTrader.com for the practice account. Go to the homepage. It's right there on the homepage. What I'm thinking. There we go. Right here. Let's fill this out. For live accounts here's the promotion, by the way, for live accounts that fund this month, there is a $100 lifetime license discount, right? And there's a couple different license options for you, but the lifetime license is the one that I would suggest because it gives you it's the maximum power you can get. So in any event, but if you're not ready, you're not ready. But if you are ready, you're ready. Buy the license, and then you could fund your account for $400 if you want, whenever you're ready to go. That's the minimum. Okay, so and then so that's how I would do that. Okay, so someone said, all right. So Ed says, man, you almost got that short. Well, we did get that short, and so this is what I'm talking about being patient, right? In my youth, when I was a younger man, I would miss that entry by a tick, which we did, one tick, and I would be like, oh man, I'm going to miss it. I'm going to move my entry. I'm going to chase it. I'm going to chase this down and get filled because I don't want to miss the move. That's like young person thinking. There's always another opportunity. There's always another market. There's always another day, right? The second best thing that could happen is you don't get filled. The best thing is you get filled and you make money. And then the worst thing is you get filled and lose money. So it's okay. It's okay, Ed. I mean, is your last name Wait? This is perfect. Ed, you just need to wait. Tiaisha, thank you for that. Yeah, so Charles says, this is a great point. So Charles says, I set up your strategy on the MES, the micro, not the classic. The one I'm using is the ES, the classic. I refer to it as the classic, and got filled a while ago when you were a tick out. So that is the market. They're not perfectly in sync to the extent that the bids and offers are the same at each level. So there is that possibility for you to get filled in one and not the other, right? It is that possibility. You could trade on the offer and you don't get filled because you're behind too many other contracts. Okay. As in, I'll wait for the cannoli. That's good, Ed. In any event, all right. So my profit target. So right now, the beauty of what we've did here is, we already had a profit target in down here, which was our original order entry, right? But from just a pure trade point of view, let me just kind of move this down a little bit. We would like to put a real order entry in, right? This is, if I'm super patient and I want to be around all day, maybe, but this is pretty far away. So what I'm going to do here is I'm going to do a little bit of order management, right? We're going to cancel these, cancel these, cancel these, and then we're going to look at what's a reasonable area here. And we just have one unit on right now. We don't have more than one unit on right now. But what's a reasonable place to get, to look to get filled? And let's first of all, let's look for the candles, right? We have higher low, higher low, higher low, right? So is it reasonable to think we're going to have another higher low? If that's what you think, then we're getting close to our target, right? Alternatively, if you think, all right, these higher lows are going to end, then no, I want to see us approach, the bottom of the value area, which is 42.28. So if that's our thinking, which is my thinking, I want to look at where's the market weakness in the volume profile, and there isn't really a market weakness here because it's almost squared off here. But if I had to really think about it, let me get my crosshairs out so I can show you a little better. This is the only divot we have in here, right? So I want to see that get filled in, and I want to see the next one get filled in. I want to get to here. I want to get to where the market profile starts to pick up some beef again, right? So 29, 42, 29-ish, right? We're almost there. And so I'm going to go ahead and put an order in there right now to, we're short one, right? We sold one. So we're just going to do that, oops, I got a 2 lot here again. Remember, we got to change it to 1, make sure we don't make a mistake. That's why I do it this way, so deliberately. Deliberately, is that a word? Okay, buy limit. And there we have our order, right there. Now, this is relatively, even though it's a micro, this isn't a micro, but this is relatively aggressive, right? At this point in the day. We have a new candle right now. Let's see what happens. We're up a handle and a half in sim money. 2 handles now, and we could see our positions up here. Our mark to market real time P&L is up here in the positions tab in the control panel in the upper left. And now we could do a couple of other things, right? We could decide to add a second unit. We could move our stop down lower, which is what I'm inclined to do right now, since this is a classic. If this was a micro, maybe not. But this stop right here is, it's pretty far away relative to where we're at. We want to do some risk management here, given that this is kind of going our way right now. So I'm going to go ahead and pull this down. Closer to the top, closer to the area of resistance, a tick or two away from that. So now I've kind of tightened up my risk exposure, and we're working on another green candle. So everything is good in the universe right now. Let's see what happens. And then, you shouldn't have mentioned the word cannoli yet, because now all I could think about is getting the 42.29s and getting a cannoli afterward. A little celebratory cannoli. Now, don't celebrate yet. We're not out of the woods. We got a lot of work to do still. But the other thing to consider too, looking at this chart, we're going to stick around another candle. We're going to stick around another candle I was going to leave at 950 on the 950 candle. We're going to stick around another one. I want to show you one other thing too that's kind of interesting to me. And it's going, I'm going to get my, I'm going to do a line, just a real rough line. And, you know, I'm going to just kind of draw it across here. And we haven't traded up here in a long time. Since 9 o'clock, since the 9 to 9:10 bar, haven't traded here. So this is what I would call very short-term area of interest, which would be resistance in my mind. So if you really, really wanted to be conservative, you'd move your stop down to that line, that area right there. I like to be patient. I want to give this thing some breathing room right now. You know, we're up 2.5 handles. If you want to get out, you know, if you think it's time to get out because the volume is so light, things aren't moving, you're moving quick enough for you. It's almost 10 o'clock. Remember, we had an hour duration for this trade idea. Then it's okay. You know, there's nothing wrong with booking profits. In any event, Miles wants to know how late he is. Well, let's just put it this way. I'm wrapping it up in 8 minutes. So we're going to say you're 52 minutes late. But I'm sure that there's a recording of this somewhere, somehow. And if you want that, send me. No, I'm going to give you my email address. If you want stuff, email me here, jim.cagnina@ninjatrader.com. Shoot me out an email. If you want to call me, you could do that too. I know the first time I did this, you know, my fellow helping me with the ninjas with the chat room was like, "You sure you want to put your phone number in there?" Yes, I am sure. Now, don't call me now. The moderator is going to go ahead and cut and paste. Miles, hang tight. It's jim.cagnina@infinityfutures.com. And actually, what I'm going to do to make it easier for everybody who cannot see, at NinjaTrader.com. Here it is, Jim Cagnina, NinjaTrader.com, and then phone number 312-373. But no, I'm going to need at least 20 minutes after this to get a cannoli and to get a new cup of coffee. So no, seriously though, feel free to reach out to me anytime. I'm here all the time. And we're here to go. All right, anyway, let me remind everybody, trading futures options on futures involves substantial risk, not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility, although that's an equation for opportunity. It's also an equation for risk. Be careful with that. Be careful with the day trade margin. Yeah, we offer low day trade margins, $500 on the classic key minis as an example, $50 on the micros. But you know, use that appropriately. Use that gingerly. Here's the big full risk disclaimer. You can find it on ninjatrader.com/risk. If you want to actually read this stuff, which I think is a good idea. It's hard to do. I want you to be patient. I want you to practice. I want you to start with micros if you have a smaller size account, and then graduate to the other ones. That's kind of that's the pathway for me. Any questions on risk? We're on a real-time sim today. I'm getting all of those pleasantries out of the way as we speak. Many, it depends on which. There's a couple different plans. So many asks, how much does data cost to trade ES and then Q? It could be a very small amount of money. If you email me your email address, I'll send you back, you know, rate sheets and cost sheets and all that stuff, instead of going through all the different options. But it's deep discount trading, and the data fee could be, you know, $1. You know, it could be low, or $4. I'm sorry. Thanks, Charles. Ed, we're going to be doing this again next week, so feel free to pop on in and say hello. I'm going to leave us with this. I think this trade setup right here. I'm still not totally comfortable being short when my bias is bullish, but I'm okay with what we're seeing on the screen right now. So If you're not comfortable, then you say, hey, this gym is taking too long. We're too close to my entry. Well, certainly consider getting out or moving your stop even further down, maybe even to break even. That's not a bad idea either. So, but I'm going to leave it. We'll see what happens. I'll type some notes in for next time. And that's it. Square Root says, thanks for the knowledge bombs. Anytime. Hopefully we'll see you next week. There's other events I'm doing too. You could kind of find online. Target hit at 3.25 handles. Yeah. That's the thing, man. I mean, you're going to be same thing. You enter a trade, you're going to have immediate loss. Usually, it's hard to sell the high of a move. How to buy the low of the high. You got to let it ride out. You got to let your patience take over. All right, guys. I do want to leave you with this. Thank you for coming. Be safe out there, and be good to each other. Take care.